Marvell is helping customers move data in entirely new ways. The company has evolved far beyond traditional networking chips into a core enabler of AI driven data infrastructure, powering how the world trains models, moves data, and scales intelligence.
Howdy, y'all. My name is Gaurav.
And my name is Rhythmay, and we're from Rouse High School near Austin, Texas. And today we're presenting our buy recommendation for Marvell Technology, ticker symbol MRVL on NASDAQ with a price target of about $93.78, representing an 18.7% upside from current levels.
Founded in 1995 and headquartered in Santa Clara, California, Marvell has grown into a leading fabless semiconductor company operating at a center of AI, cloud, and high-speed data infrastructure.
Today, Marvell operates across two key segments. The first is AI and data center solutions, which includes AI accelerators, custom ASICs, optical DSPs, and Ethernet networking, and accounts for roughly three-quarters of total revenue.
The second segment is the other infrastructure and networking, which includes enterprise networking, carrier infrastructure, and automotive and industrial Ethernet.
With a strong presence in hyperscale and enterprise infrastructure, Marvell serves customers like Amazon Web Services, Microsoft Azure, and Google Cloud, along with telecom and enterprise OEMs. This places Marvell directly in the critical path of global AI and cloud expansion.
Marvell currently has a market capitalization of about 70 billion, trades at roughly 29 times earnings and around 21 times EV to EBITDA, reflecting a company that is already profitable, scaled, and trusted by the market.
Absolutely. And the company generates about $2.84 in earnings per share. And its trading range over the past year reflects strong investor confidence in Marvell's long term role in AI and data center infrastructure.
At a high level, Marvell designs specialized chips called ASICs, or application-specific integrated circuits, which are custom built for workloads like AI training, cloud data movement, and networking.
Marvell also builds the Ethernet, optical, and data infrastructure that powers the world's largest technology platforms, including big tech company giants like Amazon, Google, and Meta, as well as chips that help enable 5G networks and modern cloud data centers.
However, while Marvell has already seen significant appreciation, we believe the market has yet to fully price in the durability and magnitude of its next phase of AI-driven growth.
The semiconductor industry underpins nearly every single major technology trend happening today, including artificial intelligence, cloud computing, automotive, and enterprise IT, and is growing roughly at low double digit rates annually.
Within this, the ASIC market is growing at around 15% per year, with a total addressable market of nearly 99 billion, driven by the shift towards specialized workload optimized silicon for AI data and data center applications.
Furthermore, Marvell currently holds about 12% of the ASIC market and nearly 30% share in data center Ethernet switching, making it a key infrastructure provider to hyperscale cloud platforms.
While competitors like Nvidia, AMD, and Broadcom dominate other parts of the stack, Marvell differentiates itself through the custom silicon specialization and high-speed connectivity rather than general-purpose compute.
And more importantly, Marvell's multi-year design wins with hyperscalers create long-term revenue visibility and high switching costs, forming the foundation of a very durable business model.
This brings us to our investment summary.
We believe Marvell is undervalued due to three long-term drivers. First, AI accelerator and custom silicon growth. Second, integrated infrastructure driving margin expansion. And third, a durable competitive moat the market has not fully priced in. We're currently seeing three powerful structural shifts in the market. First, the United States government is actively incentivizing domestic ASIC manufacturing, and Marvell is securing multi-year design wins and partnerships with companies like OpenAI and SpaceX tied to this trend.
Second, AI leaders like OpenAI, Google, Meta, and others are shifting away from general purpose compute towards specialized custom designed ASICs. Over the past 5 years, the ASIC market has grown by over 240%, and Marvell has emerged as one of the leading platforms for designing and delivering these custom AI chips.
And third, cloud infrastructure is becoming AI native and multi-layered, driving demand not only for compute, but for connectivity, data movement, and custom silicon. Marvell participates across all of these layers, allowing it to capture value from both silicon and infrastructure expansion.
From a competitive standpoint, while the semiconductor industry is highly competitive, switching costs in Marvell's markets are extremely high. Once a hyperscaler commits to a Marvell ASIC, the chip becomes deeply embedded in their architecture, creating a multi-year product cycles and locking out the competitors for that design generation.
100%. And supplier power is moderate. While leading edge foundries like TSMC abroad have pricing power, they also depend on large, recurring customers like Marvell for volume stability, and long term agreements reduce supplier risk over time.
The threat of substitutes is also low because custom workload optimized silicon consistently outperforms general purpose chips in AI data centers. The threat of new entrants is also extremely low due to the R&D intensity, IP requirements, customer trust cycles, and access to advanced manufacturing.
And this leads us to our third key driver, Marvell's durable competitive moat.
Marvell's custom ASICs are deeply embedded in hyperscaler architectures. Chip redesign, validation, and system reapproval can take years, creating multi-year product cycles and strong recurring revenue visibility.
At the same time, Marvell continues to invest heavily in AI accelerators, custom silicon, and high-speed interconnect, building a strong IP portfolio and export-regulated design capabilities, which creates high barriers to entry and supports long-term innovation and differentiation in Marvell.
Now, onto a SWOT analysis. Marvell's strengths include leadership in AI infrastructure, high switching costs from long design cycles, and strong R&D execution.
On the other side, weaknesses include reliance on large hyperscale customers, dependence on third-party foundries like TSMC, and revenue volatility tied to semiconductor cycles.
However, the opportunities in AI, cloud infrastructure, custom ASIC adoption, automotive, and 5G are all substantial, and in our view, more than offset the competitive and macro risks.
And as AI scales, the primary bottleneck is shifting from compute to data movement, driving demand for Ethernet, optical DSPs, PAM4, and high speed interconnect solutions that Marvell offers beautifully.
This increases networking content per AI rack and allows Marvell to benefit from both custom silicon and connectivity infrastructure as AI clusters grow.
Similarly, at the same time, automotive Ethernet and advanced vehicle connectivity provide a long term diversification engine, supporting Marvell's growth beyond cyclical data center demand.
Marvell currently reports GAAP gross margins of about 51.6% and non-GAAP margins near 59.7%, and we expect further margin expansion as AI-driven scale improves operating leverage.
The company generated approximately $1.4 billion in free cash flow, representing about a 2% free cash flow yield with strong multi year growth.
On the balance sheet, Marvell maintains strong liquidity, manageable leverage, and solid interest coverage, positioning the company well to navigate industry cycles and continued investment in AI infrastructure.
Thanks to strong secular tailwinds and improving financial performance, we project Marvell to continue delivering strong growth driven by AI infrastructure, custom silicon, and data center connectivity.
To ensure that Marvell was trading at a reasonable valuation, we conducted a long-term discounted cash flow analysis with three distinct growth scenarios, each using different assumptions and probabilities to arrive at a more accurate intrinsic value.
Our bear case scenario assumes a cyclical slowdown, continued margin pressure from R&D and competition, and slower AI infrastructure expansion, resulting in an implied share price of about $83.55.
Our base case, which we assign the highest probability, assumes steady AI and data center growth, gross margins is stabilizing around 60%, and continued execution on hyperscaler design wins, resulting in an implied share price of about $91.86.
Our bull case assumes accelerated AI spending, stronger operating margins from scale and product mix shifting towards custom silicon, and market share gains in AI accelerators and optical connectivity, resulting in an implied share price of about $100.81.
Weighing these scenarios together, we arrive at our price target of roughly $94, representing an 18.7% upside from our current levels. We also used a conservative assumptions to ensure the robustness and credibility of our recommendation. Like any other investment, Marvell faces risks, including competition from NVIDIA, AMD, and Intel, supply chain and foundry constraints, and reliance on hyperscale customers.
And we believe Marvell mitigates these risks through multi year design wins, strong foundry relationships, diversified end markets, and continued investment in differentiated technology. Beyond financial performance, Marvell is committed to environmental, social, and governance leadership, including a 50% emissions reduction target by 2030 and increasing renewable energy usage.
On the social side, Marvell has invested in education, technical training, and accelerator programs for students and early career engineers, helping build talent in chip design, networking, and AI infrastructure.
And during the COVID-19 pandemic, Marvell also launched a $1.5 million community relief fund to support employees and local communities, demonstrating strong social responsibility.
From a governance standpoint, the company maintains independence board oversight, full ethics and compliance certification, and compensation structures aligned with long-term shareholder interests. Marvell is no longer just a traditional semiconductor company.
It is a core enabler of the AI infrastructure era, with strong secular tailwinds and a durable competitive moat, along with expanding profitability.
At current levels, we firmly recommend a buy on Marvell Technology with an 18.7% upside, and we believe it represents one of the most compelling long-term ways to invest in the build-out of our global AI infrastructure. Thank you.
Thank you. And here's a deeper analysis on the sources we used and a more DCF summary and a terminal value calculation.